Figma just pulled off one of the most explosive IPOs the tech world has seen in years. After pricing at $33 a share on July 31st, the stock opened at $85 and ended the day at $115.50, more than tripling in value in just a few hours. That first day alone pushed Figma's valuation north of $60 billion, leaving that old Adobe acquisition offer in the dust. This isn't just IPO hype. Figma is a machine. Monthly active users have crossed 13 million, and what makes that even more impressive is that the majority of them aren't designers. Figma's become a central tool for product managers, engineers, marketers, basically anyone involved in building digital experiences. It's no longer a niche app for creatives. It's a core layer of how companies operate. The numbers back that up. With over 450,000 paying customers and 95% of the Fortune 500 using it, Figma's embedded itself deep in the enterprise space. It's also landed in 78% of Fortune 2000 organizations, an adoption curve that would take most SaaS companies 15 years to hit. Figma did it in under 10. The revenue growth reflects that momentum. In 2024, Figma brought in $749 million, up 48% year over year. The first quarter of 2025 added another $228 million to that, pacing toward nearly $1 billion in ARR. All of that while maintaining sky-high gross margins around 90% and a net dollar retention rate of 132%. Customers aren't just sticking around, they're spending more each year. None of that happened through aggressive sales tactics. Figma is product-led. Teams adopt it organically. One designer brings it in, and within weeks, the entire product org is collaborating inside Figma and FigJam. That viral expansion loop is what fuels its efficiency. For every dollar they spend on sales and marketing, they get $1 in gross profit. That's a 1.0 sales efficiency, exceptional by any standard. The product surface has also evolved far beyond what it was just a couple years ago. It started as a design tool, but now Figma includes FigJam for ideation, slides for presenting, dev mode for engineers, draw for freeform sketching, buzz for async updates, and sites for publishing. This isn't a one-trick product anymore. It's a full platform for building, planning, and shipping digital experiences. AI is now baked into that stack too. With Figma Make, users can type a prompt and generate fully formed designs. These new AI workflows are just getting started, but they point to where the platform is headed. Faster, more automated, and deeply integrated into how teams go from idea to product. All of this explains why investors are piling in. Figma is showing what modern SaaS at scale looks like. High growth, high margin, deeply embedded in enterprise, and expanding fast across product categories. They're not just keeping up, they're building the next layer of product collaboration infrastructure. But the valuation is rich. At 20 to 21 times forward revenue, the stock is priced for near-perfect execution. Any slowdown in growth or product momentum will be felt, and competition is intense. Adobe is still massive. Microsoft has its own design stack. Canva is moving into enterprise, and a wave of AI-first startups are watching closely. There's also the lockup period. In about 6 months, early employees and investors will be allowed to sell shares. These events often lead to volatility, even for companies with strong fundamentals. Leadership dynamics are something to watch too. CEO Dylan Field holds super voting shares, giving him majority control over the company's direction. For now, that hasn't caused any major concerns, but it's something that's been flagged in governance circles. Even with those risks, the long-term case remains compelling. Figma's customer base is loyal. Its product keeps evolving, and its role in how digital teams work together is only growing. The company has gone from a clever design app to a full-fledged product operating system. If that momentum continues, this stock has the foundation to be a category-defining winner in SaaS. Thanks for watching. See you in the next one.